Welcome to TradeTheMBI.com. This is Isabella Morgan doing the video report for July 5th, and here is John Morgan.
Thank you for that, Isabella. And here we have lovely action from Monday, which, well, really wasn't much of anything. It did present some interesting situations. The close trading, the NASDAQ had some freakouts on some of the stocks and the reporting that caused a little bit of panic in some people's minds. It was corrected as they froze the NASDAQ and everything. It's just a reporting error. It shouldn't have too big an effect. What should be of interest to us, though, is the turnaround and the shakeout, and it's starting to rise again. That presents perfect opportunity with it being the fifth, new fund money coming in. We're seeing the orange on the DOC moving just outside of the range that it's been caught between, which is that red and cyan, which usually keeps things pretty much in range. If we look at the ABM values, that's going to give us a little heads up as to where the general action is. Obviously, the 24.17 being the low side, and then moving up to 24.24, and we're still looking for that 24.50. Obviously, the rebalancing that took place at the end of options and stuff like that causes a little bit of an impact, but we should have new money coming in with these readings that have been reset. We're no longer overbought on anything, and just new opportunity now. We had the same situation last month. It didn't produce a whole lot. We saw some added volatility, so it's by no means guaranteed, but better to have things in order than not. And if we look at the NASDAQ here, you can see much deeper retrace, but then again, it got so far ahead of the S&P, it had to balance itself out. It's done that. You can see that it's oversold from the DOC standpoint, but still weak shakeout and stuck with that orange. So a little bit of a divergence there. We are in a pretty decent spot from an extreme histogram standpoint. So this is where I would start to look. If we start to see some action from the ES, the S&P, then I would look for it to start taking effect also from the NASDAQ standpoint. That would be generally how things are going to move to new highs. The euro being at the top side. Here was the top side of our range from way back that we've had around that 115 range, and the bottom side was always right around here. And every time we skirted below it was the dangers of deflation and that, or the EU falling apart. Now that that's completely off the table and everything, we've been at the high side of the range, which may be a bit too optimistic, given where things are. I mean, obviously, this is an implication that the Greece situation, all that's resolved, and that's fine. It's actually going to do better for S&P companies because of the exchange rate will yield bonus to their bottom line. So from that standpoint, they're not going to object to it at all. The retrace in bonds is long overdue. This was a ridiculous move. Positive extremes all have been filled back in. Except for going right back to here, we're just about even to that point. Right underneath there, a little bit ways to go, a couple more dollars. We're still below the red line, and now shakeout has finally moved to negative from being way over the top. This is just a ridiculous move. And the pop above the 13 line here really indicated it well as it started to cave, but still moved quite against the general trend, and that's something that you have to take into account when you get some of these moves that go in one direction too far. It just gets carried away, and you have to wait for that unraveling to take place. And this is where some people who talk about a macro, slide and things like that, well, you can't time it kind of thing. Well, you can a little bit better than they do in most cases, but as we can see for a lot of these things, below the ABM goal, it's not really what I would call an aggressive trade that probably doesn't have the higher statistical values. When you break below that ABM goal, then you've got a much better likelihood if you're looking at a situation where you've got a spike. You can see that USO. Now, we even saw the opposite turnaround point. USO now didn't expect the run to be very long. However, this has been fairly decent, and like we said, it can get a little bit, frothy. We're now seeing it's finally overbought, and didn't want to prejudge when it would end. Is getting close to that point. It looks like it may actually be getting close to there, but still, this has been a strong move, and there was nothing wrong with it when we saw that we were completely oversold in an extreme range right here. We can get that red and green DOC below that negative 25, it usually creates an automatic pop. And it's just a question of sticking with it as long as you get then the recovery and move with the ABM now above. And so it's not completely difficult to follow that setup. Gold continuing to suffer under the fact that there just really isn't any inflationary pressures, and oil pretty much indicated that. It's also an issue of growth. I mean, if you're seeing growth and you're seeing demand on resources, and that oil would automatically be moving higher. There's some projections from the Fed in Atlanta and that of 3.5% growth. If something like that would happen, you can see gold turn around sharp, simply because there's going to be built-in inflation in that. And any continued warmongering from Korea, and that might generate a little bit, but that's not going to be as sustainable as a significant turn in the economy where things are starting to heat up inflationary wise. And the Fed's really clamping down on that pretty hard with raising rates aggressively into what hasn't shown up as real growth. And I think there's been forward attempt on their part to really keep things under control from the change in policy from no growth to Trump wanting growth. So they're fighting him tooth and nail as that goes forward. We can see here from the early run up, we had these peak moves above 13.5, then we broke below the ABM, and sure enough, we came down. Then we reset right at the bottom, and then it popped up again. It wasn't bad. We just ended up with the steel moving below cyan. That created a little bit of weakness. I expect us to move back up to these pre-highs over here in the 34 range and go from there. We're still expecting that 50, and like we talked about before when we were looking at it way back, we expected it to move towards it, get close like it did within a couple points, and then it retraces, and you think it's never going to get there, and then you missed it, and then that's what it turns around and comes right back up to it. So we're not that far off of what we expected. I'm going to be in San Francisco most of the day, Wednesday and Thursday, and coming back to LA on Friday. And that shouldn't stop the ability to have video reports, just may not be on the Skype chat as much. So just wanted to throw that heads up there. As always, though, trade well. We'll talk again later.